Well, good afternoon. Welcome to this AIRMIC webinar on the Edelman Trust Barometer. I'm delighted to be joined today by Paul Lowen of AXA Corporate Solutions. Paul, would you like to introduce yourself?
Hi, thanks very much. I'm Paul Lowen and I'm the Regional Commercial Manager for AXA Corporate Solutions in the UK. And it's great to be involved in what I'm sure will be a very interesting webinar.
Thank you, Paul. So my name is Julia Graham. I'm Deputy CEO and Technical Director of AIRMIC, and I've got the delight today to host this webinar. The format that we're going to take about 35-40 minutes, and we're going to take you through some background as to why we think the Edelman Trust Barometer is a piece of information and a report that the modern risk manager should have in their briefcase. We think it's an essential tool, and it sits at a strategic level very comfortably with other reports like the World Economic Forum Global Risks Report. So we think if you don't know very much about the barometer, we think after today you're going to rush to the website and have a look at the report which sits there and understand the subject in a little greater depth. So go through the background, then I'm going to hand over to Paul. And Paul will take us through the detail of some of the report itself, and then we'll cover off with a conclusion and take it from there. Now, the one thing I would like to stress is that this ought to be an interactive session, so please, if you do have any questions, please do pose them, and we'll pick these up and we'll answer them as we go along the way. If you are shy and you don't want to ask any questions, please do be aware that this webinar will be available on the AIRMIC website once the webinar has finished. So if you want to have a look at the webinar again, or if you then, having looked at it, have any subsequent questions, do drop us a line on an email and we'll happily respond to them. So let's make a start. I first came across the Edelman Trust Barometer a number of years ago when I was a practicing risk manager, and it is something that I've always been very interested in, probably for the last 10, 11 years. And I was very interested to see, and how Paul became involved, is that 3 years ago this year at the AXA Corporate Solution Client Day, the whole event was given across to the subject of trust. And I remember at that meeting hearing two presenters from Edelman Trust itself talking about the Trust Barometer, and it's sort of stuck in my mind ever since. And why has that been the case? Well, I think if you look at the slide that's in front of you, there are a couple of things that in our world are changing, which makes the type of report like Edelman's so important. And this is just one particular quote. You can read many quotes like this from documents and reports all over the world. But the emphasis here is the whole context in which we're doing business is changing. And what was once a world perhaps populated more by physical disaster could as equally these days be populated by one of financial problems, and indeed as intangible assets rise on the value of our asset registers, risks that we couldn't have even conceived of maybe as recently as 3 or 4 years ago. So the whole world is changing. And that's in the context that not only are the risk drivers changing, but they're also driving the dialogue that's happening in boardrooms and executive suites. So it's drawing our members increasingly into some very grown-up conversations with their boards of directors and their executive management. So just a scene setter. The other thing is the risk context also has got some global and some trade variations. So I've made a reference here to the Willis Towers Watson Global Megatrend Report. And for those of you who are coming along to the Fast Track Forum next week on the 28th, you'll get to hear a little bit more about this because one of our keynote speakers is going to talk about these megatrends. But incredibly important, again, to the world that we live in, and cut by sectors to the industry groups that we're part of. The other thing is that we're in an incredibly challenging business environment. These two next slides have got Marsh written on them because for those of you who are very attentive and you had the opportunity to come to the World Economic Forum Global Risks the webinar that we had a couple of weeks ago, and you have got very good memories, you might notice that 2 of these slides were actually from that presentation. And the reason I put these slides here is really 2 things. One is the really incredibly quick shortening lifespan of many corporate organizations. And that really brings into great focus the importance of trying to continue and to promote the longevity of corporations. That's quite a challenge in a context where corporations are being asked to report on things like sustainability and viability. And in that same context of trying to stay in business, the corporate debt of most organizations is increasing. So it's a challenging business environment, which in the best run businesses is quite tempting to make people cut corners. And this is what we're talking about today, is trying to grow trust and avoid cutting the wrong corners, which makes it very difficult in the type of environment that I've just described. The other slide from the World Economic Forum I just wanted to linger on just very briefly is the change from familiar risks to emerging risks, and the change in emphasis on prevention to response. And emerging risks and response are really a very different type of approach to managing risks than perhaps one, again, that we were familiar with a few years ago. And if we're looking at emerging risks and we're looking at response, then issues like reputation and trust are very prominent on the register of most organizations that need to be looking at the context of the world and the businesses that they deal with. So there's a greater emphasis on issues like human dimension and on stewardship or viability of businesses and being incredibly agile. The 5 main findings, if you like, or principles from the Roads to Resilience project that ERMIC published in 2014 come very much to mind here, because these bullet points could almost be the 5 principles of resilience that we need to be building and growing. The other thing to be mindful of, that there's been a change in business models as well. Branded businesses are now often going to be leaders of very fragmented business ecosystems. Great language, what do we mean? Well, often the businesses of the future are going to be shells under which very few of the assets are going to be physical assets. So hotel chains becoming essentially large booking systems. The same might apply with other businesses which are complex and making opaque their supply chains, because who are you actually buying from and how are you buying? And of course, the web-based technology, which challenges questions as to who's got my data and where is the data. And if you're in effect running a branded business and you're brand franchising, then it brings into the whole purpose of today's exercise, which is who am I trusting? Because building and maintaining trust in a branded business is going to be just as critical as a future success factor as money, people, and know-how have been in the past. So understanding the drivers behind trust, and even as important, understanding the factors that can destroy trust, are going to be increasingly important. And it's been not more than dealing with reputation. You know, we've done a number of presentations on reputation in the past, and those of you who've come along will know the mantra that reputation is more than a public relations exercise. And therefore, it comes as no surprise that some of the components of culture which contribute towards reputation have been high on ERMIC's agenda. And of course, one of the other contributors has been trust. In fact, I would argue that it's the other way around, that reputation is actually a subset of building trust in your business. So will your people fulfill your brand promise in terms of doing business responsibly? Well, it would be very good to know that your people have got a trust in you as an organisation, which is one of the aspects of the Edelman report that Paul is going to cover in a moment. Because what we don't want to do is to end up with the X-Factor, X-File, not X-Factor, that's the wrong programme, X-File mantra of trust no one, because you have to trust someone. And as some of our not-for-profit businesses in the charity sector have recently found, that it's very easy to lose public trust. It's much more difficult to grow it and protect it. So it's an incredibly important thing. And who would have thought when we set up today's webinar, and we're going to talk a little bit about this particular sector later on because they do feature in the report, that we would be facing the situation that Oxfam face at the moment, which is tragic in more ways than one. So just as a conclusion of that introduction, we thought we'd put up a slide which basically is taken from the Edelman report itself, which explains why they study trust. Because even with that background, you might say, well, so what? Well, Edelman started out looking at 4 institutions of business, government, media, and NGOs. And they've been plotting this for a number of years. And in effect, Paul, I believe Edelman started out as purely as a media business. And they've really sort of gravitated very much into this advisory and consultancy role on trust. And the reason that they wanted to understand this was to understand how trust in those institutions varies over time, and how people and organizations begin to fear that which is no longer, they feel, in safe, reliable hands, and the fabric of society can so quickly unravel to the detriment of all. And I think the words that were on the previous slide for Oxfam are a very good illustration of how things can unravel, and so incredibly quickly. So from an institutional standpoint, this is where trust varies from reputation. Trust is very much a forward-looking metric, and we're talking about predictive metrics a lot in ERMIC at the moment. And although reputation is incredibly important, it's really more based on an organization's historical behavior. So trust, we believe, is a great predictor of what we think the future might hold and whether stakeholders will find you credible. And I think, again, this is another reason why, if the risk manager is trying to look forward as well as looking backwards, it's an incredibly important piece of knowledge for them to have. So it's really for those reasons that Edelman started up the Trust Barometer and have been carrying on with the production of the report over a number of years. So, Paul, I'm now going to hand over to you, and you're going to take us through some of the key findings of the current report.
Okay, thank you, Julia. As Julia says, I'm now going to take a whistle-stop tour through the results of the 2018 Edelman Trust Barometer. So I'll start off with just a brief explanation of the methodology. The online survey is done in 28 markets with 33,000 respondents as a total. It was conducted towards the end of 2017 and is broken down into 3 populations. One is the informed public, and to meet that criteria you need to be aged 25 to 64, college educated, and in the top 25% of household income, and also report significant media consumption. Then there's the mass population, which is everyone else, and a third population, which is an amalgam of both of those, i.e. the general online population. In addition, trust is measured in 3 categories. Where there is a score of 60 to 100%, that's regarded as trust. Where it's in the proportion 50 to 59, that's neutral. And then distrust is where any score is under 50%. So hopefully that just gives a bit of background as to where the results sit. So if we look at the history of trust through the Edelman report, we start off with the rising influence of NGOs. We then move through to a trusting shift from authorities to peers, and also a movement where a person like me, i.e. the general public, emerges as a credible spokesperson, and where business is more trusted than government and media. We then hit the economic crisis in 2018, and after that we find that business has got to partner with government to regain trust. So there's an obvious lack of trust in business there, and that trust is now an essential line of business for all companies. Moving forward, we see a fall of government influence, and then that business comes back a little bit and begins to lead the debate for change, and that trust becomes essential to innovation. Bringing us to 2017 with trust levels at crisis point, and finally to 2018 and the battle for truth, where we live in a world without common facts and objective truth, with fake news crowding out real news. And just a reminder for those of you who want to put any questions in as to how you do it. Okay, so moving on to the report itself. And we see that trust levels reached their nadir in 2017. And 2018, we see absolutely no recovery on a global scale, and little overall change in each institution or respondee segment. So it looks like everything is staying pretty much the same as it was in 2018. So we're looking at, on a global level, a world of distrust, where the global trust index remains at distruster level, with 20 of the 28 markets seen as distrusters. And just an interesting point from the UK, we see that we stay firmly in the distruster territory. However, within the overall picture, there's a polarization of trust. When we look at the aggregate percentage point change, we see 17 trust gains and 11 trust losses. And at the edge of each of those, we see 6 extreme gains and 6 extreme losses. And whilst the UK remains pretty static, we find the 2 most powerful economies at each end of the spectrum, with China showing a 27-point aggregate change in the positive, and at the very opposite end, we see the US with a negative score of -37. So within the whole picture, there is a number of volatile dynamics going on. So the trust crash in the US. The collapse of trust in the US is driven by a staggering lack of faith in government, which fell 14 points to 33% among the general population, and 30 points to 33% among the informed public. The remaining institutions of business, media, and NGOs also experienced declines of up to or between 10 and 20 points. It appears the United States is enduring an unprecedented crisis of trust. And this is the first time that a massive drop in trust has been linked to a pressing economic issue. It's ironic that it's actually happening in a time of prosperity, with the root cause of the fall being the lack of objective fact and rational discourse. On the other hand, we see China rising, led by a trust in government up 8 points to an all-time high of 84%. And we see that happening both the informed public and the general population. So, what are the drivers of distrust? We're now in a world worried about fake news, where 7 in 10 people worry about false information or fake news being used as a weapon. And it's interesting to see some of the movements worldwide, particularly in Germany, where they've passed a law that fines social media companies for failing to delete fake news in a timely fashion. It's something that we're likely to see spread globally. Looking at the trust in business as a sector, we see no change globally, with it staying at 52%, i.e. in the neutral category. However, business is distrusted in the majority of markets, with the biggest winners and losers mirroring the bigger picture, with China having the largest increase of 7 points and the US the biggest loss of 10 points. Very interestingly, media has for the first time become the least trusted institution globally, where it's distrusted in 22 of the 28 markets and only trusted in 3 of those. And there's a divergence between trust levels between traditional and online only media versus search engines and social media platforms. Exactly half of those surveyed indicate that they interact with mainstream media less than once a week, while 25% said they read no media at all because it's too upsetting. And the majority of respondents believe that news organisations are overly focused on attracting large audiences, breaking news and politics. In addition, 63% can't distinguish between good journalism and falsehoods, and 59% find it difficult to tell where the news originates from.
And I have to say, Paul, that that's a bit condemning when you've got major decisions about the future of countries and our economic destination. I've got things like Brexit in mind, where it seems to me that it comes as perhaps no surprise, but it's interesting to have confirmed that people are making decisions without a great deal of information in the background.
Yeah, I completely agree. There doesn't seem to be any commonality of fact, and people don't know where to get the truth from. And I think that is shown in a lack of confidence in the media, which leads to the loss of truth. People aren't sure what's true and what's not. Loss of trust in government leaders. They don't know which politicians to trust. And of course, a loss of trust in business, in which they don't know which companies or brands to trust. However, into that vacuum of trust, the voices of authority are starting to regain credibility. We see technical experts, academic experts, financial analysts, successful entrepreneurs, and even CEOs actually raising their rating once again. It's also interesting to see that journalists have actually increased by 12 points, albeit to still low level of 39. But I think that does highlight the fact that whilst people trust journalists, they probably don't trust the news that comes to them generally because they don't know where it comes from. So they want to trust journalists, but they're still unsure of the veracity of the actual news itself.
There's a very practical aspect in there too, because I remember when I saw this report presented at your event 3 years ago, that the CEO position was a lot lower than we see here. And it almost led to some conclusions that if you have a crisis, you ought to think very strongly before you put your CEO in front of the microphone and the press. And what it seems to be saying here is, well, maybe chief executives have been listening to the fact that they need to skill themselves up in dealing with some of these leadership issues in front of the media. Do you think that might well be the case?
I think it certainly is the case, and I think it's part of the risk management's success story that they've managed to get that message to CEOs. And I think that they're starting to train CEOs to talk to the press correctly and to mitigate any real problems that they have from any crises.
Interesting.
It's obviously not always the CEO is the best person to go in front of the press. And again, I think that's part of the risk management job, that they identify the best person. And I would say that this is a bit of a reflection of that.
Well, it's where you'd hope the leadership of the organisation to be. So I think that's good news for all concerned.
Yeah. Another quite interesting facet of this is that there's less trust in the general public, i.e. a person like yourself. Whilst it's still 54% and in the neutral territory, it is declining. So I think people are seeing how easy it is to post things on social media, and the distrust of that, I think, is reflected in that score. So one of the most interesting results is that for CEOs, building trust is seen as priority number one, over and above products and services and profits. In fact, 64% say that CEOs should take lead on change rather than waiting for the government to impose it. So it puts quite a burden on the CEO that they actually have to lead change now. And I think change is the dynamic of that position. One very positive move, plus 7% globally, is the increase in trust in an employee's own company. With employers trusted around the world in 26 of the 28 territories, and there being no distrusters whatsoever. Against the general trend of the survey, the US shows a positive move of 15 points. And it's also interesting to see the UK post a very positive move of plus 14%. I think my reading of that is that the first people who see good in a company are the employees themselves. So I would see that as a good indication going forward, and something that is very positive out of this particular report, that companies are being more trusted to act socially, responsibly, but also to protect their employees and their stakeholders. So I think that's a very positive and interesting result that's come out of this. It's also interesting to note that the general view is that business must show commitment to the long term. 56% agree that companies that only think about themselves and their profits are bound to fail. But there's still a general view that 60%, or held by 60% of people, that CEOs are driven more by greed than a desire to make positive difference.
But if you're in a global economy where the longevity of companies is decreasing and financial pressures are increasing, then anything that you can do to look at future long-term has got, it's very interesting dynamic, isn't it, of balancing long-term viability with short-term expectation, financial pressures, coupled with the fact that companies, you know, there's almost half that only think about themselves are bound to fail. So taking that good stewardship, as the FRC take the term, you can see perhaps why they're supporting that as what large organisations should be doing.
Absolutely, but it is against the backdrop of short-term expectation of financial profits. It's very much like in football, where your manager, you're only as good as your last result.
Are you talking about Manchester City there, are you?
Oh, absolutely.
Yeah, we won't go there. Yeah.
Okay. Right, so dependent on where a market stands, there are different trust-building mandates for business. For example, for the UK, the priorities should be to invest in jobs, ensure equal opportunity, safeguard privacy, drive economic prosperity, and provide for future generations. So very much what we see happening in the UK at the moment. Companies headquartered in Canada, Switzerland, Sweden, and Australia are the most trusted. The least trusted country brands are Mexico, India, Brazil, and surprisingly China, who, whilst they trust themselves, are obviously not trusted to such a degree by the rest of the world. It's interesting to note that trust in brand US has dropped by 5 points, the biggest decline of the countries surveyed, but not far behind is the UK at a -4 score, which I think is perhaps due to Brexit uncertainty. If we now focus down on the industry sectors, we see technology continue to lead the way, with a few interesting movements in other sectors. So I think what's quite interesting here is the movement, the positive movement of energy. I think that's due to a greater focus on social responsibility and clean energy. We see the largest downward trend over a 5-year period for the automotive industry, probably due to the carbon emission testing scandals. And financial services, while still being bottom of the league, actually improving by 6 points. And that's perhaps because feelings are a little less raw as the economic crash becomes further and further in the past. So that's just, as I said, a whistle-stop tour of the results. And I'll now hand back to Julia just to summarise.
Well, thank you very much, Paul. And I think the first thing to say is that the full report is on the Edelman website. It's a very large report. We've only really been able to take some of the headlines from it today. It's well worth going in and exploring it. It's sliced and diced, rather like the World Economic Forum report is, Global Risk Report is. It's sliced and diced in lots of different ways. You can drill into the sectors and you can drill into the individual metrics that sit behind them. But it's well worth taking a little bit of time out and explore what it might do to help you understand the context, because this is what this is all about, of the work that you do in the organisations that you represent. But we're not saying that this is the only thing that you need to do, but it's certainly one of a number of reports that you can use to build up a really good map of the environment that your organisation is operating in. And if your board hasn't seen this, it may well be something that you as risk managers can take a lead on and produce some reporting that can go directly to your board to help inform their own decision making. So yeah, this is all good stuff, but what can you do about it? Well, interestingly, we put this sort of little list together of things that we felt businesses need to do to build resilience. It's not a new list, but actually listening to Paul talk about the report, I can see all of these aspects in everything that you've said. We need to collaborate to build capability. It seems to me that countries and organisations that have alienated people are the ones who are suffering the most. And there's a big message in there to say that you need to collaborate to build capability, whether that's across countries or functions. It's certainly something, particularly if you're using suppliers and partners in other countries, knowing how those other countries think and act is a really important thing to do. There was a strong emphasis that the leadership of the organisation needs to align everybody behind their corporate vision. And there's a strong emphasis on the purpose of your brand, your strategy and culture. Understanding your corporate and brand and country reputations is absolutely key, because reputation is a key builder of trust and not the other way around. If you don't track and respond to emerging issues, then you're operating in a vacuum. And I'd argue that this barometer is one way that can help you do that. I said it's not the answer to everything you need to know, but it's certainly a great tool to have in your tool bag. And prioritise. You can't do everything that you would like to do, but it does give you some ideas about threats and vulnerabilities. And of course, risk is always the upside and the downside. So it's very important that you look at opportunities and aspirations. Communication, very interesting. Face-to-face or social media. I think we need to take some lessons away on the social media front. And it's something that ERMIC is looking at for future events, getting in people to come and talk to us about what you can and can't do in helping you to use social media, not just for the obvious communication, but also understanding what some of its downfalls might also be. And I can't think of an event at the moment or a paper that I read that doesn't say over and over again that organisations need to prepare and respond effectively to crises. And if you go back to that World Economic Forum global risk slide, World Economic Forum is certainly saying that you cannot manage risk by just looking at preventative measures. In a connected and complex world, you just don't know what you're sometimes going to have to respond to. So having a team that is multifunctional and able to think on its feet and be agile is absolutely key in a crisis. So I think it's all useful information to consolidate where we're going. And these 4 bullet points, again, are taken from the Edelman report, and they really consolidate what we're saying in the previous slides, that what the risk managers need to be helping their organisations to do is to help make sure that we understand some of the risks associated with lack of diversity. We need to ensure that employees all the way through organisations understand the aspects of risk and opportunity. Culture and open communication is what it's all about, and establishing risk appetite and indicators. And Paul, you know, if we could do one thing and get across simply, I think, to boards exactly what risk appetite is and the indicators might be, we probably will have achieved a great deal, especially if we can link that through to issues like employee awareness and culture. Just as an aside, there's more that you can read. Don't worry, we're not going to go through a detailed review of this particular piece of research, but there are other equivalents to the barometer out there that you might want to go away and have a look at after today. And just one example of that is the Veracity Index, which is produced by Mori. That came out in November last year, and it looks at things like net trust in professions. It's a close ally of the Edelman report, and again, it's put in here because it's yet another tool that the modern risk manager needs to have in their toolbox, just like they do for dealing with physical risks. It's really important that the modern risk manager is fully equipped to deal with these issues as well. So, Paul, I'd like to thank you on behalf of AIRMIC for coming along today and sharing some insight into this report. And I'd like to thank the members and our colleagues who've dialed into the webinar today. Thank you for taking the time to join us. As I stressed before, this webinar will be placed on the AIRMIC website alongside the slides with a link to the Edelman report so that you can go through and have a look at it yourself if you wish to. So thank you very much indeed for joining the webinar today, and I wish you a good day, and thank you again to Paul.
Thank you, Julia.